Welcome to Barron's Roundtable, where we get behind the headlines to prepare you for the week ahead. I'm Jack Otter. Coming up, tariff developments are changing by the day, shaking up major industries and spooking the markets. Norwegian Cruise Line CEO Harry Summers will tell us how tariffs are hitting the travel sector. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levisohn, Elizabeth O'Brien, and Andrew Barry. So, Ben, it was a pretty ugly week in the market, a last-minute kind of rescue by Chairman Powell. What was going on?
Yeah, I mean, it could have been a much uglier week. Powell came out and said some good comments Friday afternoon about the economy being in a good place, sparked a rally. But the S&P 500 and NASDAQ still had their worst weeks of the year. They're in some pretty bad losing streaks as well. There's a lot of worries to go around. One is the AI trade. We had a company called Marvell. They make chips for these companies to use in AI. They had earnings and got slaughtered after releasing them. Market bounced back a little bit when Broadcom came out, but there's still this problem with the AI trade. And then you just had this uncertainty around the Trump tariffs. That hasn't helped, and it really just caused the market to sell off.
Yeah, and I think you could see an actual outright contraction in GDP in the current quarter.
That's right. Even if you look at something called Atlanta Fed GDP Now, which is just a tracker, they update what GDP would look like given the numbers that we have so far. It's pointing to a very big decline in growth during the first quarter of the year. We're very early in the quarter, so we're not quite sure how it's going to be. A lot of that is probably due to imports coming in. There are a ton of them because of the tariff threat, and that is subtractive from GDP. But we're going to have to really wait and see what happens with the economy.
Yeah, that's a little bit of an anomaly, but we'll see what happens. So look, for months, if not years, we've been talking about the Mag 7, so expensive, but valuation's not a reason to sell. Well, now maybe it is. What's the catalyst that caused investors to sour on that whole group?
Well, we've had this idea that, the United States was the place to be, and these 7 stocks were really the stocks to own. And they did get expensive, and the market got concentrated. And for a while, there was no reason to get rid of them. But as people started to wonder about the impact of AI with DeepSeek coming out, and also about Trump's policies, I think they've decided to take some risk off. And when you take risk off in the U.S. market, it's coming from those big tech stocks. And so a lot of them have just gotten hammered. Tesla's gotten hammered. Meta, which had been so strong, had a 20-day winning streak in February. It was down more than 10%. And so it's just a chance that people are taking their money out of these stocks. They're looking elsewhere, and it's hard for the market to go up when you're selling the biggest companies.
Is anything working? Oh, sorry.
Yeah, you're seeing defensive stocks doing well since the NASDAQ peaked a couple weeks ago. Staples, drug stocks like Hershey, General Mills, and Johnson & Johnson are up 10 to 20%, even as the market's been going down.
Yeah, and it's not just defense, though. And what I find fascinating is that there's a stock I've followed for years called Gilead Sciences. They discovered a cure for hepatitis C, and they have been stuck going sideways for the last 10 years since that happened. That stock is now moving back up near its high and could be breaking out. And I find this fascinating that this was the most hated sector, the healthcare sector, and now you're finding some real winners there.
I remember how bullish everyone was on Gilead 10 years ago. Wow. Andrew, another sector we haven't mentioned, but it's not doing well, is housing. What's happening there?
Well, the housing market seems to be cooling off in many parts of the country going into the key spring selling season. Seems to be weaker in the Sun Belt, states like Texas and Florida, and stronger in the Northeast. We still have a dearth of new homes for sale, as well as difficulty in building.
So you've been good on calling sort of the bottom, or at least near the bottom in the housing sector. Is this a buy the dip kind of thing?
Yeah, I mean, I think the stocks have gotten hit hard in the last couple of months. They're down 25 to 35%. So you've seen a pretty big correction. You could see some pressure on earnings in the coming year. There's uncertainty about what impact tariffs are going to have. It's possible that you could see an increase in home prices of new homes by $5,000 to $10,000 from the impact of tariffs on Canadian lumber. So that's an uncertainty, but I think the stocks are well priced for that. You have stocks like Lennar, an industry leader trading for about 10 times earnings, Toll, a luxury leader, around 8 times earnings, and smaller stocks like Meritage and Taylor Morrison trading for around book value.
All right, and also mortgage rates have ticked down a little bit, which is helpful.
A positive development.
Sure. Let's switch over to Social Security, Elizabeth. For so many years, we've heard people worried it's going to run out of money, I'll never get my check, et cetera. Now we've got a new layer of worries, stories about fraud and abuse. Tell us what's happening.
That's right, Jack. And Elon Musk has called the program a Ponzi scheme, which it really isn't, because you eventually get back what you paid into the system. In fact, a lot of people get back more in benefits than they paid in payroll taxes. But there is concern now. There is some chaos at the industry. It's been, the agency, the Social Security Administration, it has been the target of DOGE cuts. And so pre-retirees are wondering, what does this mean for me? Should I lock in benefits while I can? Generally, the answer from experts I've talked to is no, you should stick to your plan. Social Security is not running out of money as long as there are American workers paying payroll taxes. The program is not running out of money now. It is running short, and Congress is going to have to fix that. But it is not going broke, and only Congress can make changes to benefits.
And then we heard from President Trump, tens of millions of people over 100 years old getting benefits and so forth. What's happening? Why that?
Yeah, those claims result from a misreading of the data. This idea that, we're paying out millions of people benefits beyond the grave or paying their families, that's just not possible given the reporting requirements in place. Hospitals and funeral homes have to report deaths to the Social Security Administration. So to the extent that there is abuse and fraud in the system, it is isolated incidents of fraud, crime, really, not these systemic errors that President Trump is referencing.
And it's run by a really old computer system called COBOL. Apparently some of Elon Musk's young kids have never seen that before, so they misread
it. It's so old the Doge engineers did not understand it.
Maybe time to update that. Okay,
exactly.
Thanks, guys.